The market pushes to the brink, then sells heavily into the close. Have the bears found their teeth? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that even though the market could push a little bit higher, we expected a strong sell-off as we were coming to the end of a diagonal, and that's exactly what we saw. The market pushed up to the brink, just over 40.66, and then sold off strongly at the end of the day. Now the question is, can the bulls step in, or are the bears taking over? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, before we jump into the charts, guys, just a quick note. I do these videos at the close of the day before. You see them at the open the next day. A lot can happen in between that time. This is just a snapshot in time, and what I put out during the day is extremely valuable. You can see on the screen that our trades are very well constructed. We use risk management, and we make money. You can see one of our traders before he was with me was negative 50%, and now his account's up about 60% since being with me. It's not about being right or wrong. It's understanding the key levels, and it's understanding when to trade, how to trade off of those levels, and when to get out of trades. And that's what Elliott Wave gives us. While it's not perfect, it is very powerful, and it's a very powerful trading tool if you know how to use it. So if you're interested in that, you want to be part of this amazing trading team, stay tuned for later in the video. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and we talked yesterday about this potentially being the high over here because we were at our target level in the 40-30 area. I said they could push it up to that 40-50 area or above, which they did. 40.66 was about my cutoff, and they kind of poked through it and then broke down from there. So they didn't really break out over 40.66. They got to it, touched it, and sold off pretty strongly from there, all the way down below 39.80. So almost a 100-point sell-off there in the last hour and a half of the day. So pretty strong selling as we would expect because we did get a diagonal pattern higher. And as I illustrated, when diagonals top, you see very strong selling. And that's exactly what happened here. So now the question is this a diagonal? You know, I don't trust diagonals, but this one did get all 5 waves in place. So that's a very strong positive for the bulls, as is the MACD on the daily chart of both the ES and the SPX, as they have both bullishly crossed. So we do expect the bulls to hold and the market to move higher. Now, just because the MACD is crossed doesn't mean it can't cross back and go lower, but typically when the daily MACD crosses, it's a very bullish sign. So we did get, as we talked about, 1, 2, 3, 4, 5 up, and as we talked about, this was a diagonal, so a lot of ABCs in there. And then we got the strong selling down. Now our target for this move down is the 39.57 down to the 38.96 level, and I would expect it to be in the 39.30 to 38.96 level on the ES. And the reason for this is because diagonals tend to retrace down toward their starting point, which would be right in that level. So that would be a very normal thing to happen, to see a very deep retrace here down toward 38.96, and then the bulls need to step in. Now, can diagonals trace deeper? Yes, they can, and they could come down to this trend line, test it one more time and bounce, but we would expect the bulls to step in at around that 39 or 38.96 level or before, and then start to see a 1-2 setup to the upside. So remember that this move up right here, this 5-wave move up, is wave 1 of a bigger wave C. Okay? Then this ABC, or this move down we would look for would be wave 2 of a bigger wave C. And you likely won't get an ABC, as you can see, very straight down, very common off of a diagonal. But anyway, wave 2 down, then 1 of 3 and 2 of 3, then you'd look for the explosion higher. And at that point, we would be on our way to 4,300. So this high now becomes the key level for the bulls because it's essentially the same as this high here. And they almost took out the wave 2 high as the alternate possibility, which would have kind of shaken up the bear case quite a bit, but they didn't. They got just to the top of it and then sold off. So we expect the bulls to step in and then rally strongly toward that 4,300 plus area we've been talking about since last October. Now, if they're unable to do that, okay, we do have this move down in wave 1 as an alternate. I do not like this count because this is a very corrective move down, okay, in my opinion. And then you would have this move as high as wave 2. Then this low is 1 of 3, and this high is 2 of 3, and then this would be 3 of 3 down, and it's a big 3 of 3 down toward the 2,900 to 2,500 area on the S&P 500. and, well, the futures of the S&P 500, which are about 30 points different than the actual SPX. But the point is, this should be a very strong sell-off down because it would be a wave 3 of 3, and those are the strongest waves in the structure. So what we would expect to see at this point is a pretty strong move down that breaks this low before we get any kind of significant bounce. Now, you may get, you know, a little move up like this or something, a little 20-point move or something, but a pretty straight move down, okay, before you get down to the break of this level. And then you'd expect a little bit of a bounce and then continuation, and not much of a bounce because what we're doing here is wave 3s tend to travel pretty straight and pretty fast to the downside or upside, depending on which way they're headed. So I wouldn't look for big bounces for entries in that case. When this low gets broken, that is a strong signal to the bulls that we are headed lower. Okay, so that would be the alternate count, that the bulls cannot hold support and we come down and break this low. Okay, and that would lead an open door to the 2,900 to 2,500 area on the S&P. Over on the NASDAQ continues to play picture-perfect pinball. Came up and hit the 236 here. Okay, so wave 1 and wave 2, and then you look for wave 1 of 3 up toward the 0.5 area, which you got. Wave 2 of 3 down. You look for wave 3 of 3 to hit the 1,236. I'm sorry. Wave 3 of 3 to hit the 1,236. Wave 4 of 3 to pull back to the 764, which we saw, and you look for all of wave 3 to hit the 1,618, which they poked just above it today, and then started to pull back again. Now, you would expect them to hold the 12,700 to 12,570 area, and they're already in that area, so the bulls do need to step in on the NASDAQ here fairly soon, but they do have all the way down to 12,490, okay, before they invalidate the move up. So the other wave 4 of wave 3 was right here, just above that area. You would expect, based on corrective depth theory, that this wave 4 would hit that area as well and then move higher. And the target on the move higher would be the 13,258 to 13,600 area on the next move up. Okay, so the NASDAQ continues to play perfect fib pinball. Pulled back, we would expect it to hold this area again. 12,490 is our cutoff. Below that doesn't mean necessarily that we're breaking down completely. It does mean that the next move higher could potentially be a little bit choppy. Okay, the alternate path on the NASDAQ is that we've topped here, okay, and that we have to pull down in a wave 1 of 3 because the NASDAQ did take out the wave too high. Then you need a 2 of 3, and then you need a move down that breaks this low, and that would be a very strong signal that the NASDAQ is going to sell off very strongly. And when I say very strongly, I do mean down toward the 5,000 to 7,000 area on the NASDAQ. So these lows are very key that we made last week. I believe on Monday of last week we made these lows. Those are very key right now for the market. As long as they can stay above those, the overall structure is bullish. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there and become part of that trading team and make sure you love it before you ever spend a penny. You can cancel at any time. We just started our Elliott Wave for Beginners course where you can get all of my videos on how I teach Elliott Wave and learn the structures and setups that I use. That is included in both memberships. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training videos you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you're interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you kind of have to see to understand, and that's another reason we give you that free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. We are looking for the bulls to hold support. That is the 39.57 to 38.96 level, all the way down to the low. But once it breaks 38.96, you should start to get cautious if you're bullish, because that is the last standard support level. It is a diagonal, and they do trace very deeply, so it would not be out of bounds for it to trace just below that level or down to that level. For the bearish count, we would have topped in wave 1 of or 2 of 3 here, and we'd be starting 3 of 3 down. That would break this low, and that would be a strong indication that the C wave down is in full effect. Over on the NASDAQ, playing good pinball here. Looking for them to hold 12,490 on the bullish side of things. If they can hold 12,490 and push higher, we would expect 13,258 to 13,600 as the next targets in the move up. If not, it doesn't necessarily mean we are going lower, but we could have a choppy move higher as well. A break of last Monday's low, a week ago Monday's low, would be a very bearish sign. Guys, that is the market update for today. I will talk to you tomorrow.